Well, to explore a few of these issues raised in the report in a little more detail, I'm joined now from Hong Kong by Todd Martin, Societe Generale's Asia Equity Strategist. Todd, thanks for joining us there.
Well, thank you for having me.
Well, this report was actually written in late 2010. It's only just been released. How important is it?
Well, I think it raises issues that I think are important. They may not be, foresightful for looking into the next, say, 6-12 months. But the bottom line is that, asset quality does remain a risk for the Chinese banks. We think that NPLs are going to be moving in towards the 5% range next year. And by 2013, we could get up to double digits. There is an off-balance sheet risk, what they call their shadow banking system. It makes up around 3 to 4 trillion renminbi, and there's certainly risks there because there's a lot of on-lending that's taken place there. It's basically a Ponzi scheme, but I think China is starting to get that under control. And then they also have a property market that's in a bubble. They're trying to manhandle it down. This is one of the reasons why we're going to see the rise of NPLs. China is slowing. We've seen PMIs coming off. So all these things, I think, are probably already priced in, but I think it is important that an institution like the IMF does come out with reports like this and highlights them in a big product.
You mentioned a couple of concerns there, but probably in a more concerning way, if I can put it, than the actual report did. Do you think the IMF is perhaps pulling its punches here a little bit, given the politics of all this?
Well, I don't think the IMF is known for, big reports that beat the market to the punch. So I don't think that's expected out of this. But there's no question that politics plays a huge factor in all of this. Just this week we saw Obama and the U.S. government now re-engaging Asia from the point of perspective of having more open trade. You have Obama visiting literally many different countries around Asia, except for China. So politics is being played. We all know this, but I still think this report is important. But now we're going to be moving forward to trying to deal with the non-performing assets and literally deleveraging China, just as the United States and Europe are deleveraging right now too.
Do you think China is moving a little bit on this? Because the report talks about state controls over the economy being partly to blame, but there is some easing at the moment. I noticed that Bank of China has relaxed its credit quotas and allowed bank loans to surge literally just in the last couple of weeks.
Yes, it is. And I think the most important part of that surge of the new credit growth is that the credit growth is being directed towards small and medium enterprises, not necessarily the SOEs that usually hog most of the new credit in China. So bringing credit to...
I was going to say that's actually very important in terms of keeping harmony and making sure that there isn't a lot of social unrest, which I know is a very big issue in China, isn't it?
It is. And just remember that these SMEs are private companies. They're not necessarily state companies. So they're bringing credit to those that are in need and perhaps could even add more jobs as we get into this new cycle. So you raise a good point.
The IMF has also said that banks should be pushed further and they should be allowed to operate according to market forces. I noticed that one of the co-authors, Jonathan Fechter, said that take the training wheels off, he says, and let the banking system work. But surely China only has to look at Europe to see what sort of experiment that's led to.
Yeah, that's... okay, let's separate these two. Europe is a very developed banking system and a very developed market. China has yet to liberalize deposit rates, okay? So I don't think China is anywhere near the issues of perhaps liberalizing too fast and too early. For example, Societe Generale's China economist Wei Yao is now calling for 5 reserve requirement hikes starting in January of next year. She says that liberalizing deposit rates would be a very important move towards kind of bringing real returns back to the savers in China, where people would rather keep their money in the bank rather than buying the next property. So these things have yet to take place, and I think these are important baby steps for China. I don't think they are anywhere in a risk of liberalizing too much, just like Europe did.
The other pressure that, of course, the report had was bound to be the currency. To what extent is the renminbi losing value anyway, though, because of Chinese inflation?
Well, I think, China is certainly seeing competition. I mean, the rest of Asia is nipping at its tail. The state-owned enterprises are going to have to reform and restructure over this next business cycle, in this next 5 years. I think the renminbi, it remains a very political issue. Whether it's undervalued or overvalued depends on, the bottom line is that their financial system certainly has to adjust. And I don't think we're going to see the sort of overall, trade growth plus capital inflows like we have seen in the past. It certainly remains political between China and the U.S. I mean, I know that, the U.S. would love to tie in, balance of payments to the level of the currency, but there's no question that China rebuffed that a couple months ago. I think China is going to do it in its own way. We have seen trade slow, and there's no question that we've seen this overall economic growth for China. So I think we might just be seeing this dealing with itself.
I'm sure you're right that China will do this in its own way. Todd Martin, thank you very much for talking with us.
Thank you for having me.